Hello and welcome to another oil update. We take a look at the WTI chart here in this update, and the price is currently under pressure, absolutely. And I want to share with you the wave count as well as support and resistance levels. First of all, we see the problem we're dealing with here on the long-term chart. Yeah, when we zoom out a little bit, you can see this chart has really only been moving sideways overall in this range here, you could say, since at some point in 2023, and we just have started to move sideways for a long time. Lower highs, higher lows. Now recently we had a breakout to the downside, so I'm leaning towards further downside because of the break below the trend line and the ongoing selling pressure that we've seen since then. In the white count, this means the B wave formed the top here in September 23. And then we are dealing now with a diagonal pattern to the downside in a C wave. And we have a wave 1 already done. We have a wave 2 done. The third wave is now unfolding as an A, B, C. Then there should be a 4-5 pattern at some point. So this would be the scenario that I am leaning to right now in the short term. Not high probability because honestly there is no impulsive decline at anywhere. But if we zoom in a little bit, we can see that obviously the price broke recently here below the trend line. And then since then, we've stayed below resistance. Resistance is the 78.6 to 50% retracement area from the last decline that started on the 1st of April and ended down here on the 8th of April. You could say this is an A wave down, B wave bounce, and now we are setting up for a C wave decline. This would be the preferred scenario as long as the market stays below $68.28, because this is resistance, and with a downside breakout, the market now needs to get back above resistances to confirm that something more bullish is playing out. Now, technically, I have to leave, even in the white count space, room all the way up to $68.28, because even if we're following the downside pattern, a larger bounce might occur before we go lower, yeah. But even in the very short term, we could even say that as long as the market is below the last swing high at $64.30, we might go down more directly. And then also here in this pattern, in this internal C wave down, we have a wave 1, wave 2, A, B, C, and wave 3, 4, 5. That also seems to be an ending diagonal pattern. So all of that, with these diagonal patterns, we don't have high confidence in follow through at the moment. There's just nothing there. Without impulses, we know that structures change frequently. So it just means we have to be on the side of caution, or at least be on our toes. Now, what I would like to see for further confirmation that we are really moving down, I'd like to see a move below $57.16, a decisive break below, because the more bullish case, in which we could move higher in a C wave, in a 5-wave move, the more bullish case will become less likely with a break below micro support, and we're now in this support area. So it's a really, really key spot that we've arrived at. And I mean, we have seen a reaction to resistance. Now we are back in support. What could happen is from here another rally and test of resistance. But below $57, this will become less likely. It's the 78.6 retracement of the last rally that started in April. And this is a key spot now. Something to observe and watch next week. And yeah, overall, I mean, my preference is the white scenario until the market breaks above $68.28. And then we can follow the yellow count, which means that the B wave never topped in September 23, but instead it's still unfolding. Yeah, I'll keep you updated about that over the coming weeks. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates about different asset classes like stocks, gold, silver, for example, check out our stocks membership. You'll find the link in the description. Thank you very much. Bye-bye.